Forget the day-to-day price swings for a minute. There is a financial engine running just beneath the surface of the crypto market that most people have never heard of. And it's quietly setting the stage for the next wave of Bitcoin millionaires. This isn't just a hunch, it's about understanding the plumbing of the crypto world. And in this video, I'm going to show you exactly how this hidden catalyst works and what you need to know before everyone else catches on. While everyone is glued to the charts, they're missing the real story. The explosive growth of one specific type of coin is about to unlock a tidal wave of capital. Section 1. The invisible engine fueling Bitcoin. Think of a stablecoin as a digital dollar. It's a crypto token designed to hold a steady value, usually pegged one-to-one with the US dollar. They are the poker chips in the crypto casino, the stable, reliable currency you use to move in and out of bigger, more volatile bets like Bitcoin. All right, let's cut right to the chase. The coin I'm talking about isn't some flashy new meme coin with a cute mascot. It's a class of crypto that, frankly, a lot of people find boring. I'm talking about stablecoins. And that brings us to the most important part of this story. Now, don't click away. I know that sounds technical, but I'll make this dead simple. History shows a powerful link between the supply of stablecoins and the price of Bitcoin. They serve three critical functions for the crypto market. It's a massive signal of incoming buying pressure. This isn't just a theory. You can see it on the charts. And when they want to cash out of crypto entirely, they convert those stablecoins back into real money, a process called redemption. Large-scale redemptions can signal that money is leaving the market. Time and again, major surges in the supply of stablecoins have come right before huge rallies in Bitcoin's price. In a historic move in mid-2025, the US government passed landmark legislation for stablecoins. Think about it. Why would someone turn billions of real US dollars into digital ones? The law does several crucial things. Usually it's because they're getting ready to buy something. And in the crypto world, that something is very often Bitcoin. Liquidity. They make it incredibly fast to trade crypto without constantly cashing out to a traditional bank account. A safe haven. When the market goes wild and Bitcoin's price is dropping, investors can jump into stablecoins to protect their cash without actually leaving the crypto ecosystem. Frictionless capital. They let billions of dollars fly around the globe 24/7 without the slow, clunky, and expensive legacy banking system. This gives the safety and clarity that pension funds, corporations, and major Wall Street players need to enter the market at a massive scale. We break down these kinds of market-moving trends every single week so you can stay ahead of the curve. It's not just crypto companies anymore. It's household names you use every single day. It's free, and it really helps the channel out. When a company like PayPal makes it possible to send and spend digital dollars as easily as you use their app, it closes the gap between traditional finance and crypto for hundreds of millions of people. The company is now expanding its use across different blockchain networks like Arbitrum to make payments faster and cheaper. This move is part of a broader strategy to integrate PYUSD for payments, transfers, and e-commerce across its massive network of users. Historically, each of Bitcoin's major bull markets has created tens of thousands of new millionaire wallets addresses holding over $1 million worth of Bitcoin. With the catalysts we have now regulated stablecoins and corporate adoption, this cycle could be the most explosive one yet. Industry leaders like MasterCard have openly welcomed this progress, recognizing it as a pivotal step that legitimizes the entire ecosystem. Models based on historical capital flows suggest that as the stablecoin market continues its journey toward $1 or even $2 trillion, a Bitcoin price in the hundreds of thousands becomes a very real possibility. As the pool of regulated digital dollars swells, a big chunk of it will look for a home in the most secure, decentralized, and sought-after digital asset on the planet, Bitcoin. The stablecoin market is dominated by two giants, Tether and USD Coin. Their models are based on Bitcoin capturing a piece of the global asset pie and becoming a cornerstone of our new financial internet. Together, they represent the lion's share of the entire stablecoin universe. And that universe is getting bigger at a shocking pace. As of mid-2025, the total market cap for stablecoins has swelled to over $250 billion. For years, people have questioned if Tether really has the reserves to back every single USDT. For the past year, everyone has been telling you to watch inflation rates, interest rate decisions, and Bitcoin ETFs. And yes, those things matter, but they aren't the secret engine. The new regulations are designed to solve this by forcing transparency and audits. We are witnessing the creation of a regulated multi-trillion-dollar pool of digital US dollars, getting ready to flow through the global financial system. Still, any major problem with a top stablecoin could shake market confidence, at least temporarily. That's $250 billion in digital cash, sitting on the sidelines of the crypto market, ready to be deployed. This isn't a guaranteed one-way ticket to riches. There are still very real risks to think about. This is the catalyst that will bring in millions of new users and trillions in institutional money. And while the mainstream media is still obsessed with the daily price chart, you now understand the fundamental machine that's driving this entire market forward. Bitcoin's price will still have gut-wrenching drops. Whales will take profits, and leveraged traders will get wrecked. Never, ever invest more than you're willing to lose, and understand that the path to higher prices is never a straight line. And let me know in the comments, what do you think is the single biggest catalyst for Bitcoin right now? I'll see you in the next one. Section 2. How the engine actually works while the Genius Act is a massive step forward. How these rules are implemented and enforced is what truly matters. A poor rollout or harsh interpretations could still create headwinds. So, how does a giant pile of digital dollars make the price of Bitcoin shoot up? The relationship is surprisingly direct. These stablecoins are the on-ramp, the gateway, to the digital asset economy. And in the digital asset economy, Bitcoin is the undisputed king, the final settlement layer, and the main reserve asset that everyone aspires to own. More stablecoin usage means more liquidity and more roads leading directly to Bitcoin. New stablecoins are created or issued. It's a huge signal that fresh capital is flooding into the market. It's like seeing a fleet of armored trucks deliver mountains of cash to an auction house right before a priceless piece of art goes on the block. On the flip side, when investors get spooked, they sell their Bitcoin for stablecoins. This is the hidden engine. The flow of stablecoins is the flow of capital, and right now, that capital is flowing in thanks to a monumental shift. Section 3. The game changer. The green light from Washington. For years, the biggest hurdle for crypto adoption by the mainstream and big institutions has been regulatory uncertainty. Well, that uncertainty is finally starting to evaporate. The Guiding and Establishing National Innovation for U.S. Stablecoins Act, or Genius Act, was signed into law, creating a clear federal framework for how stablecoins can be issued and regulated in the United States. This is the moment the big money has been waiting for. It defines what a payment stablecoin actually is. It legally requires issuers to hold one-to-one reserves in safe, liquid assets like cash and U.S. Treasuries, making sure every digital dollar is actually backed by a real one. It sets up clear rules for who can issue stablecoins and which regulators are in charge of overseeing them. For the first time, stablecoins have gone from a legal gray area to a fully regulated financial product in the world's largest economy. If you're starting to see how these pieces are connecting, do me a quick favor and smash that subscribe button. Section 4. The trillion-dollar snowball effect. With regulatory clarity as the foundation, we're now seeing the beginning of a corporate adoption snowball. Its most powerful example is PayPal. PayPal didn't just dip its toes in. It launched its own regulated dollar-backed stablecoin called PUSD. This is how mainstream adoption truly starts. Every person who holds or uses PYUSD becomes a potential new user of the wider crypto ecosystem. Section 5. The millionaire math. What the experts are saying, so how does this translate into the millionaire part of the title? And the price targets from some of the sharpest minds in finance reflect this. Cathie Wood and her team at ARK Invest, famous for their bold calls on disruptive tech, have a bull case projecting that Bitcoin could reach $1.5 million to dollar. It's $2.4 million per coin by 2030. While that might sound extreme, even more conservative analyses point towards staggering growth. This is based on the simple math of capital flows. Section 6. But what are the risks? Okay, let's be real for a second. First, regulatory risk hasn't completely disappeared. Second, market volatility is a feature of crypto, not a bug. Finally, stablecoin integrity is still a major focus. So here's the bottom line. The real story, the one happening just below the surface, is the legitimization and explosive growth of stablecoins. This is the fuel for the next great crypto bull market. The question is no longer if this will create a new wave of wealth, but whether you'll be positioned before the rest of the world finally figures it out. Thanks for watching. If you got any value from this breakdown, hit that like button, subscribe for more deep dives,